In this video, we're going to be doing something a little bit different. I'll be telling you guys about my latest investment that I was looking into, and that is none other than cryptocurrencies. So typically, I like to talk about stock market investing, but I think that right now there's been a lot of focus on Bitcoin as Bitcoin recently just crossed its previous all-time highs. For those of you guys who watch my channel, you'll know that I like to look at the technicals and try to understand chart patterns in order to position our trades. Later on, I'll be diving into the technicals about Bitcoin right now and why I decided to buy in right now at all-time highs. But first, let's start off with how value was exchanged throughout history. So back in the days, what people did was they would specialize in one thing and trade that good or service for other goods and services that they need. So there are people like blacksmiths, people like farmers, people who herded cattle, and each person had their own specialization. You couldn't do all things because each thing takes quite a bit of time to learn. So if you specialize in one thing and created more than you actually needed, then you could take that excess and trade it for other things. So you could go trade a cow for a sword, or you could go trade your corn for a cow, and this is how the whole trading game happens. But we realize as a civilization, as humans, this is a very inefficient way of trading goods and services. There is a better way, which is what we have right now, currencies or money. And money is a great intermediary exchange medium because it's backed by the government, so the government actually puts value to it, and then everyone can trade their goods and services for money and take that money and go out and buy any sort of goods and services they want, because we all have the understanding that that money is actually worth something because the government says so. If the government collapses or the country fails, then money becomes practically useless. In most countries today, though, currency is relatively stable, especially in first world countries. When you look at third world countries, things like cryptocurrencies start to make a little bit more sense in terms of why people would buy in and store their value in them. That's because their government's currency is a lot more volatile because of how corrupt the government is or how unstable it is. They could be good one day and all of a sudden crash the next day. So this is where people would buy into Ethereum or Bitcoin in order to store value. So we know that money is a great medium of exchange, but what really makes a good medium of exchange? And that's what we're going to talk about next. And I'll give you 5 points of what makes a good medium of exchange. The first thing is portability. And it's very important to have a portable medium of exchange because this will allow you to buy large items as well as small items without having to lug around this medium of exchange. So if you were to use things like rocks or stones or even like bushels of corn to buy a house, imagine how much corn you would need to lug to pay the person in corn. That's just not realistic. But for cash, you can essentially go to a bank and put your cash in there and get a check, and that same amount of value can be on a piece of paper that's as light as a feather. So we can see that money is fairly portable. And for Bitcoin or cryptocurrencies, they're also the same thing. These are essentially digital text files, so they weigh next to nothing, and they can be carried on USB sticks. So cryptocurrencies tick the box of portability. The second thing is divisibility. This is the ability of dividing it into small manageable chunks. So for example, you don't want to have one Bitcoin which is worth $23,000 today and not be able to divide it into smaller chunks, because that means you can only pay in increments of 23,000. However, Bitcoin and other cryptocurrencies are able to have their amounts divided into smaller amounts. The smallest amount of Bitcoin that you can have is 1 Satoshi, and there's 100 million Satoshis in 1 Bitcoin. So you can see that 1 Satoshi is actually a fairly manageable amount of currency, which you could use to buy things as small as like a piece of chocolate out there. So cryptocurrencies have divisibility just like money. The third thing that a medium of exchange has to have is limited supply. And this is where fiat currencies or money right now falls apart a little bit, because governments continue to print money year after year after year. And this ultimately devalues the currency, because you can't just keep adding more currency and expect it to be worth the same. You're essentially growing the number of pieces of the pie, but you still only have 100% of the pie. And I think that cryptocurrencies do a fairly decent job of this, of keeping limited supply, especially with Bitcoin. Other coins like Ethereum, not so much, but they also have their own uses and there's different reasons for using them. But for Bitcoin, there's a limited supply and there's only 21 million Bitcoins out there, no more, no less. There's one caveat with this, is if the community decides that they want to increase the number of Bitcoin count, then this could possibly happen, but there needs to be a majority vote. And it's unlikely that the total amount of Bitcoin will actually increase because those people who are in the Bitcoin community hold Bitcoin, and when you increase the number of Bitcoin, then essentially you're diluting yourself. So there would need to be a really good reason for people to vote to increase the number of supply of Bitcoin out there. The fourth reason is acceptability. And this is where cryptocurrencies are lagging behind a little bit. So acceptability is the ability for this currency or medium of exchange to be accepted widely. So cryptocurrencies right now, you can't go to the grocery store and pay with cryptocurrencies. Maybe there are some small niche stores that allow that, but you can't go to your local Sobeys or Zehrs in Canada or your Kroger's or CVS pharmacy. You can't pay with cryptocurrencies there. Not yet, at least. I think that we could get there one day, but we're not there yet. So this is one thing that Bitcoin or cryptocurrencies don't have in favor for them. Whereas money, you can go anywhere and pay with local currency and it'll be accepted without a doubt. The last point for a medium of exchange to be viable is uniformity. A simple example of this is a $5 bill that is crisp off the mint is going to be worth just as much as a wet $5 bill, as a $5 bill torn in half but taped back together, or a $5 bill that's been folded 5 or 6 times. They all hold the same value. Granted, a mint $5 bill could be worth a little bit more to collectors, but that's besides the point. Whereas gold, for example, does not have uniformity because you could have a piece of gold that's pure versus a piece of gold the same weight that's not pure where people have injected impurities. And you would need to be some sort of gold expert to know that there's impurities in there. Otherwise, if you're an average Joe, you wouldn't be able to tell. So gold is very difficult to have uniformity, especially because people can alter it easily. Cryptocurrencies have uniformity because one Bitcoin is going to be the same value as another Bitcoin unless it was tied to some criminal activity, but that's an edge case there and we're not going to get into that. But essentially, if you're an average Joe trading Bitcoin for a product or Bitcoin for a service and you just exchange it through a wallet, that person who's receiving it is not going to know if it's been involved in a crime. So ultimately, cryptocurrencies have uniformity. So in summary, what makes a great medium of exchange is portability, divisibility, limited supply, its acceptability around the world, and uniformity. So the reason why I looked into Bitcoin recently is because it broke its previous all-time highs. And for those of you guys who watch my channel and know that I like to look at charts, one thing about Bitcoin is that its previous all-time highs acted as resistance. And that was roughly around 20,000 USD per Bitcoin. And it broke past that up to 23,000 USD just a couple days ago. And what this tells me now is that the $20,000 mark should be some level of support. And Bitcoin, when it comes back down to that level, should bounce off if the trend plays out. So I think that the fact that Bitcoin broke out means that there's probably more upside. And this is what a lot of traders out there will be looking at. And this is maybe why we saw a huge run up from $20,000 all the way to $23,000 in the span of a couple days. Because people realized Bitcoin broke out, and the last time that happened, well, this is what happened. So when we jump onto my computer here, we can see a chart of Bitcoin. And this is its price history since year 2010, where it was worth about 6 cents when it started. And then we had a huge spike in Bitcoin, we can see here. And just for you guys as note, you can see that this is a logarithmic chart. So it doesn't exactly look like a typical chart, but this actually helps us visualize better the percentage gain. So Bitcoin went from about 5 cents or 6 cents in 2010 all the way up to a high point of about $24.67 or so. And that was in 2011. So Bitcoin essentially like over 100x at this period. I think it was like a 400x or something like that. And then it had a huge crash. It dropped from around $25 all the way down to $2 or $3. So you see it dropped about 90% or so. However, if we continue to go forward in the future, from 2011 all the way to 2014 or 2013, we can see that it ran from about $24, its previous all-time highs, to about $1,050. So that's roughly around a 50x there. So you can see here that Bitcoin in a span of 2 years ran by 50x. And then it chilled for quite a while here and dropped back down. And again, it was a pretty huge crash. So it crashed from $1,000 down to about $200 a piece. However, in 2017, this is where things became a little bit more interesting, where it climbed back to its previous all-time highs of $1,000 and shot beyond that all the way up to about $20,000 USD. So it's really hard to get that here, but we can see in the span of a year, it about 20x itself. And since then it's chilled quite a bit, but it dropped back down to about $3,000 per Bitcoin. So you can see that every time that Bitcoin reaches new all-time highs, like here, it drops back down very dramatically by 90%, but the new lows are actually higher than the previous all-time lows. So we went from 7 cents to $3 or $2, then we went from $2 all the way to $200, then we went from $200 all the way over to $3,000, and now Bitcoin actually sits just above the previous all-time highs, and if history repeats itself, we should get something like a 10 or 20x. And ultimately, that's why I'm bullish on Bitcoin based off of its price history. Now, price history can't be everything, so there must be more reasons as to why I'm bullish on Bitcoin. And there are. So there are analyst predictions out there that say that Bitcoin could run to about $400,000. And by my prediction, I think that it could even get to like $570,000. And this is how I arrived at that number. So I took the amount of gold in the world, which is roughly around 187,000 tons, and multiplied that by the price of gold per ton, or really just convert that into ounces and multiply the price of gold per ounce by the number of ounces of gold that we have in this world. And that equaled to roughly around $12 trillion. And then I took the number of Bitcoins and divided the total market cap of gold by the total number of Bitcoins and got to the number of $570,000. Because I believe that Bitcoin could eventually have the same market cap of gold or something similar, which would put Bitcoin's value at $570,000. And that is my bold prediction for Bitcoin. It doesn't mean it's going to happen in the next year. It could happen in the next 5, 10, 15 years, but I think that eventually we could get there. And I think that with the companies that are going into Bitcoin, this is a major reason to be bullish, because there are major companies that are diving into cryptocurrencies, and when they take hold of cryptocurrencies, then the whole world does. Like Square was one of the first movers, now PayPal's in it. Now we have hedge funds investing in Bitcoin because they're realizing like, oh crap, if I don't invest a little bit of my money in Bitcoin and it takes off, we could be underwater. So a lot of hedge funds out there are investing millions of dollars or even billions of dollars into Bitcoin. But just know that these hedge funds aren't putting all their funds into Bitcoin. It's really just about 1 or 2% of their funds. But if 1 or 2% ends up 10xing or 20xing, it could be a 20% of their portfolio at that point, which is quite crazy to think. So for them, they're only risking about 1% of their portfolio to hopefully make a 20x. So if they lost that 1%, would they really care that much? Probably not. When we read the news headlines, we see things like, this firm invested $744 million into Bitcoin. You're like, wow, I could never even imagine how much cash it is. But for them, it's just 1 or 2% of their portfolio. So I think that we're going to see heavy buyers into Bitcoin right now with a lot more institutions getting into it. Square and PayPal leading the way, but there's also platforms like Robinhood or even Wealthsimple Trade now, which is where I'm actually buying my Bitcoin. So if you're interested in that, just a side tangent, you can open up a Wealthsimple Trade account today. You can open up the crypto account, and when you do that, you can get $10 towards trading. So you can invest that into Bitcoin. If it 20x's, then you got $200. But a disclaimer, I'm not claiming that Bitcoin will get to that. These are just my speculations. Take them with a grain of salt. Now, before we end this video, there's one other thing that I want to talk about. There's also alternative ways to invest in Bitcoin. You don't just have to buy Bitcoin or even other cryptocurrencies. You can buy companies that are supporting these. For example, NVIDIA was a hot topic in 2017 because they created the GPUs that mine cryptocurrencies. Square is a hot topic because they ultimately buy Bitcoin and allow Bitcoin trading on their platform. You can also buy into PayPal, for example. Other plays could be maybe investing in utilities companies because Bitcoin, when it continues to rise in prices, the economies of scale make sense for people to start their own mining farms, and then this will mean that people are buying GPUs and CPUs to mine Bitcoin, which means ultimately they're using more electricity. So utility companies will benefit from this. Right now I have a decent position in Square. I don't have anything in NVIDIA. However, I just made my first investment into a company that I think could really benefit for Bitcoin. So subscribe if you want to find out what that company is. I'll be talking about it later on in my video of my Wealthsimple trade update, and I might do a dedicated video on that company itself. That's all I have for you guys today in regards with Bitcoin. Again, go down in the comments down below if you want to talk more about Bitcoin and just get my opinion, or just share your bearish or bullish thoughts on it. As well as while you're down there, hit that like button, subscribe button if you're new here, and I'll catch you guys in my next one. Keep up the grind and have a great day.